If you feel like you're suffering from information overload and you're still confused about which system settings to use tomorrow, hopefully this lecture will simplify things for you and give you more confidence at creating the correct settings. If you find maths a bit tricky, hopefully these pictures will help us make some setting decisions. This graph shows the trading times in terms of trading times from and trading times to. So clearly there's a very well defined block which is a profitable block, and that runs from 7 to 12. So there's trading hours from +7, anything over 7 but less than 12 should be a good setting. Then trading hours to run from 12 over here up to about 21. So anything between 12 and 20 or even 21 should be good settings, using a common sense approach interpreting the graph. So let's move on to the other settings and use the graphs that we created previously. This is a graph of the MA settings for the period and offset. Not as clear as the previous one, but somewhere in the middle you can see a good concentration of positive settings. So I would say if we look at the MA period, anything short of 450, anything on this side of 450 should be ignored, and you should be using settings higher than 450 but not necessarily more than 650, because there's a bit of a corridor of loss-making ones there. So that will hopefully capture that type of area. Then in terms of the offset, certainly that seems to be the borderline, which is more or less a 500. If you look at 500 being the borderline, and then 650 is the upper borderline where it starts getting a bit mushy. But so those kind of settings should capture that profitable area. So I would say these settings that we have here, plus 450 but less than 650, plus 500 but less than 650 for MA periods, using again the graph as our main guide. This is a much more simple graph about the targets versus the stop loss, and certainly any target less than 200 doesn't look very attractive. So target should be over 200, but less than 350, that area becomes a little bit dicey. Although still profitable, it does look less attractive. In terms of the stops, again, anything over 100 looks good, but less than 150. So that area seems to be the area for stops. So again, just using the graphs to make these kind of decisions. Then we haven't got graphs for the trading days, Mondays to Sundays, because the graphs are two-dimensional and you can't really present 7 items on one graph. But in general, from the overview of positive and negative trading days, I would say Mondays and Tuesdays can be left off your trading calendar for this particular technique. Also, trailing stops, we didn't do any multi-dimensional graphs for trading stops, but 170 seems to be the optimal trailing stop for this particular system on a number of tests that we've done. So now we basically have all the ranges for settings. So what I've done is I've taken those settings that we have determined in the previous section, and I have eliminated Mondays and Tuesdays, and the rest of the days are active. I have also created the range from 7 to 12 and from 12 to 22 in terms of the trading times. I've also, in terms of the moving average and the moving average offset, as we said, anything over 450 up to 650 would be good, and anything over 500 up to 650 would be good for those particular settings. The take profit, we've noted that anything over 200 is good up to 350, and the stop loss, anything from 100 to 150 is good. So, and then the last input is actually the trailing stop. So we've actually catered for all of the settings that we've identified in the previous exercise using the graphs. So what I'd like to do now is run a optimization based on those refined settings that we've identified, and let's see what happens. So we press OK and we tick optimization. Now I've already done this run for us, and because there's a big number of options, there are 8,640 options. I have used the genetic optimizer and it has reduced the 8,000 to 1,000, and in fact in the end over 1,000 runs of those settings were made. And let's go and have a look at that. Remember, we have 1,000 runs that we've made. Now, before we look at the results of that 1,000, I want to take you back to one of our earlier lectures, virtually the first lecture that we did, where we did an optimization exercise on the moving average settings in terms of the period and the offset. And I don't know if you can remember, but there were 400 tests done. And of the 400 tests, only one item was positive. Now that we've done all this analysis work and we've got a very good idea of how the EA works, we're in a position to refine our settings quite considerably. So let's go and have a look how many of the 1,088 tests that were done are positive, and how many are negative. Also, what we need to look at is how much they are positive and how much they are negative, compared to, always bear in mind, that very first test where we had 399 negatives and 1 positive. So let's go and have a look at the optimization results. Okay, and here we are. And in fact, we actually found results that are even better than the original all item test that we did. So we've actually increased the profitability because of this exercise that we did with the graphs. So the top number is 1,800 now, and if you look down, there's a huge amount of positives that are now coming out. So let's have a look at the negative trades. Now I've sorted it from negative to positive, and let's have a look. There are only 3, 6, 9, 12, roughly 15. There are 15 negative trades out of the 1,088 tests that we've done. So we have turned the system around from being highly unsuccessful to being highly successful. Also, look at the size of the losses. The losses are tiny compared to the profits. I'll just sort it by profit again. Compared to the profits, the losses are incredibly tiny. So what we've basically done here is we've given ourselves a chance to make an intelligent decision about possible settings that we can use for the future. If we hadn't done this exercise, we'd be guessing at this stage, and we'd be making emotional decisions or gut feel decisions. Now we're making decisions on facts, and we know more or less where the sensitivities lie and where the danger areas lie. So I think we've come a long way since one of the first lectures when we had 1 success out of 400. Now we have 15 losses out of 1,088, which is a big turnaround. If you add up the profits on the successful ones, it will be just completely amazing. Also, it gives you a bit of confidence about, if we had to start trading tomorrow, what kind of settings to use. Now, I'm not going to analyze these any further, but you now have the process to follow with not only this EA, but with any EA that you might ever own or write. This is the process you follow. You refine it and refine it and refine it until you know how the EA works, where the sensitivities are, where the danger areas are. For instance, one of the danger areas was, as we saw, that if you use very low moving average numbers, you are almost guaranteed to have huge losses. So you build up knowledge by doing this analysis. I know it was at stages very boring and looked like we were going around in circles all the time, but during each phase we were learning more and more about the system, and that's what you need to do. So many people buy EAs and they just plug them straight into their live VPS systems and trade, and it's actually sad when that happens, where people don't actually analyze the EAs. Anyway, I hope this lecture has given you a bit of hope, and it certainly has given me a bit of hope in terms of the complete turnaround. And this was really quite unrehearsed, just went with what was coming. There was no, I didn't know these results that we currently look at, for instance. So this was also a discovery phase for myself. So let's move on to the next lecture.